All right, welcome. This is my weekly real estate market update. As always, all my blog articles, my information that I share can be found at martinuzzi.com.au. I really strive to keep property owners, buyers, everyone that's in property mode informed so you can make the best decisions moving forward. What caught my attention this week was some of the latest commentary from NAB's chief economist, and she's forecasting not one, but 5 interest rate cuts, and starting with a 50 basis point cut in May. So the RBA is meeting on the 20th of May, and they're predicting a 0.5% decrease in that cash rate, and then followed by 4 more 0.25% reductions throughout the remainder of the year. Now that's fairly, I would suggest, aggressive move by the RBA if that were to happen. And I've got a couple of thoughts on this. Firstly, let's put it in perspective. So on your average $600,000 loan or mortgage, that would be a savings of around $526 a month. Now that's pretty good, right? And as a mortgage holder myself, certainly 5 rate cuts, I certainly invite and welcome absolutely. And those savings on your mortgage repayments obviously will then be used as a greater disposable income, which will stimulate the economy and likely maybe even push up inflation a bit. But I think they've got inflation fairly under control right now. And that's probably not my biggest concern about such aggressive rate cuts. I think, with the state of the Australian property market at the moment, we're seeing a severe undersupply of properties across most markets in Australia. Melbourne, with an exception, they've seen more supply than demand at the moment down there. And it might even make for a welcomed opportunity to invest in Melbourne at the moment. But most of the other places around Australia, severe undershortage of property availability and huge demand. On the Sunshine Coast, we've got great demand for properties. We're often receiving multiple offers within a short few weeks on most of the properties we're selling. So the demand is still high and the shortage is still light on. Now, I think with the election passed, we might see some more properties come to the market now. I can imagine that's the case, and I'm already seeing signs of that, which is good news for those looking to buy. And that might bring a bit more balance to the supply and demand equation. But with 5 rate cuts, naturally that'll push a lot more demand into the property market. And when we have huge demand and little properties available, naturally the property prices go up. Now the NAB's forecast for the year, and this is a capital city dwelling values forecast, they're suggesting it'll rise by 3.3% this year and 5.6% next year. Now that's for capital cities. I've suggested a 7% annual growth here on the Sunshine Coast year on year. And obviously some markets will perform better than others and some suburbs on the Sunshine Coast better than others as well. But around 7% growth on the Sunshine Coast is my forecast for this year. Now with those 5 rate cuts, obviously that could boost that significantly because more demand, more buyers, more competition, and naturally prices go up. So an interesting read there, and I've put all the details again in my blog article this week with some other insights as well that might be worth a read if you're in property mode. So check it out at martinuzzi.com.au, and thanks again for tuning in. Have a great week.